Before we look at the metrics, remember that PLAZM is an experimental DeFi protocol. DeFi, or decentralized finance, refers to financial services operating on public blockchains. This content is for educational and entertainment purposes only, and you can lose your entire investment. Always do your own research. Welcome to day 168 of the PLAZM protocol, officially Breakout Monday. We are tracking a 6.4% price surge, a 300% acceleration in daily bond minting, and a vault that just crossed $500,000. This dual access line chart shows PLAZM jumping to 3.1 cents. That is a 6.53% increase from yesterday, marking the most significant single-day upward action we have tracked in weeks. Right alongside it, eSHARE is running hard to $10.49, securing a 7.04% gain. When both protocol tokens move aggressively in the same direction, buyers are stepping up with actual conviction. Capital is flowing into the ecosystem, confirming a distinct upward trend rather than a random market bounce. This radial gauge tracks our total treasury reserves. The vault currently holds 225.75 ETH. ETH stands for Ether, the native cryptocurrency of the Ethereum network. Because ETH itself is moving higher, the vault's dollar value has climbed by almost $40,000 since yesterday, hitting a new high of $517,100. The protocol now holds 11,910 total bonds. 106 of those were minted in the last 24 hours alone. Compared to yesterday's 31, that is a 3x acceleration in a single day. Daily yield is holding steady at $710.69. Meanwhile, total claimed profits sit at $110,587 of capital deployed back out of the protocol to users. Bond APR, or annual percentage rate, the yearly interest generated by the bonds, currently reads 50.16%. That is a roughly 4-point dip from yesterday. The math here is straightforward. With 106 new bonds minted, the consistent daily yield is now being spread across a larger number of total bonds. Yield compressing as supply expands is exactly how the system is designed to operate. The Treasury is aggressively scaling its base and safely distributing the generated yield across a rapidly growing number of participants. This 4-part pie chart shows the current token distribution. The total supply has a market value of $280,000. From that supply, 19%, or 2.16 million tokens, have been permanently burned. 25% is staked, 40% remains liquid, and 16% sits in LP, or liquidity pools, which provide the trading liquidity for the token. The BBB engine is heavily funded. The buy and burn pool holds 66.5 thousand in USDC. USDC is a stablecoin pegged directly to the US dollar. Buy and build has $27.4 thousand ready to deepen liquidity. Finally, the buy and grow engine is automatically minting 3.27 new bonds every single day, using only generated yield. This radar sweep shows the upcoming token unlock schedule. Over the next 7 days, only 2,619 PLAZM tokens release. Looking further out, we see 80 clear days ahead, facing 0 major cliff events and no massive unlock spikes. Across the burn and build engines, we have roughly $94,000 in dry powder. When you pair that automated buying pressure with a completely clear unlock schedule, the protocol has the exact conditions required to compound its current momentum without facing sudden supply shocks. The day 168 verdict is a bullish breakout, with both tokens surging over 6% and bond minting accelerating to 106 new bonds in 24 hours. The data is entirely positive. The smart contracts do not care what day of the week it is or what the broader market sentiment dictates. The code executes its logic ruthlessly, taking incoming capital and continually compounding the protocol's growth. Once again, PLAZM is an experimental project with real risks, including the potential for a total loss of your investment. Past performance does not guarantee future results. This video does not constitute financial advice, and you must always conduct your own independent research before making any financial decisions. See you tomorrow for day 169.